I made over $100,000 in profits with ICT trading, and turtle soups are a big part of it. It's an advanced ICT model. In this video, I'm going to show you the exact frameworks I use to skyrocket my win rate using turtle soups. I'm going to show you the exact two-step model and how you can use this to actually make money. No time to waste. Let's get into it. The turtle soup model is an advanced ICT model. And what it does, in an uptrend, price trades upwards towards a clear draw on liquidity. And before it goes to the draw on liquidity, you see the prices start to consolidate, leaving short-term sell-side liquidity. And what a turtle soup does is it takes that short-term sell-side liquidity before continuing the move. So price basically takes extra liquidity first and then targets the opposing liquidity. Same for a short example, price trades lower towards a clear draw on liquidity, but before we go there, price takes out short-term buy-side liquidity before continuing the move. So what happens a lot of times is you get stopped out before the real move. And this video, I'm gonna exactly explain how to anticipate this and how to avoid getting stopped out before the real move using turtle soups. And why is trading the turtle soup so important? If you've seen the liquidity video on my YouTube channel, you have seen that there is a high resistance liquidity and low resistance liquidity. And high resistance liquidity is when price sweeps liquidity before making the move. So in this short example, we sweep short-term highs before starting to make the shift lower, market shift, fair value, order block, all that stuff. This is high resistance liquidity. You want, if you take a position, that your position is defended by high resistance liquidity. So if you take a short, you want to be defended by this. If you're taking a long, you want to be defended by high resistance liquidity. That price sweeps some form of liquidity before the actual move. And next to high resistance liquidity, there's also low resistance liquidity. And low resistance liquidity is when we don't take out any liquidity before the actual move. And you want to attack this. So let's say we trade into a key level, and inside that key level, we create high resistance structure. Where it is, because we take liquidity before the shift up. There is where you have a very high probability setup on your hands. Because you have high resistance liquidity creating a key level. You have a market structure shift. In this displacement, you have a fair value gap, you have an order block. Most of the time you also have some form of SMT or an inversion fair value gap or a breaker. So from this area, you have high resistance liquidity defending your position, and we are targeting low resistance liquidity. That's what you want. And I created free training on how to go from emotional trading and blow accounts to securing over $100,000 in funded accounts and consistent monthly payouts. No fluff, just straight value. So make sure you check out the link in the description to watch this training as soon as possible. So going back to the turtle soup, is what happens is you have a bullish bias and you have a high resistance liquidity created before the move. So when this happens, you can already take a move here, but especially in this move is where you have high resistance liquidity defending your position, and you can just take your trade inside a order block for value gap breaker right there. You have two entry possibilities. Same here for the bearish side. We have extra liquidity, we have high resistance liquidity created, and we're targeting some form of low resistance liquidity. Let's say a very obvious draw on liquidity. And it's an advanced concept, but I'm gonna break it down in just two simple steps. Step one, you need to have a clear draw on liquidity, a higher time of draw on liquidity. Because when we are in an uptrend, we need to have trust in, okay, this short-term liquidity soup of extra liquidity is just a turtle soup and not a reversal. So to have that, the first step is to have a very clear draw on liquidity. And there's an entire blueprint on how to identify liquidity here on this channel. But the quick summary is this. On the higher time frame, daily, weekly, monthly, you need to have trending conditions. And what you do is you trade from internal to external, from a fair value gap back to an old high, fair value gap back to an old high. And once price is there, then you have a very clear bias. When price comes here, your draw on liquidity is going to be the extra range liquidity. So when price comes into this fair value gap, here is where you can pay attention, because price at a lower time frame, zooming into this price action, price goes down into that fair value gap, and then it goes upwards. And what you can anticipate perhaps is a turtle soup before the real move. This on the lower time frame right there. Similar for bearish trend, price goes from internal to external. Fair value gap to old low, fair value gap to old low. When price comes here, price goes lower, lower, lower. It can consolidate a bit. And then after turtle soup, it goes to the draw on liquidity, the old low. So step one is identifying your higher time from draw on liquidity. So have a clear target where we want to trade towards. The second step is trade turtle soups in the direction of the draw on liquidity. So if your draw on liquidity is higher, you want to look for bullish turtle soups like this. And if you're bearish, you want to look for bearish turtle soups. And now you might wonder, how do you know it's a turtle soup and not just a reversal? Because when price goes up and up and up, you still have the draw on liquidity higher, and it starts to just consolidate. And after that, it doesn't do this, but it just goes straight lower. How can you anticipate it's going to be a turtle soup? And here is my exact framework for this. You want to look for high probability turtle soups. And there are three components to a high probability turtle soup. One is SMT. SMT is a cracking correlation between correlated pairs. So let's say we have NASDAQ or ES, Euro US dollar. GPUs dollar. And when you have correlated pairs, they need to move in tandem. So if Nasdaq makes a lower low, you want the ES also to make a lower low. When they stop following each other, that means one makes a lower low, but the other one doesn't. There's where you have an SMT on your hands, and it could indicate a potential reversal. So that's for SMT. The turtle soup needs to be made in a key level. And what's the key level? It's an old high or low, extra-range liquidity, or inter-range liquidity. So here in this example, we see that the price makes the turtle soup inside a fair value gap before continuing to move upwards. You can also have a turtle soup at the highs. So when we have the old high and we maybe gonna trade lower, then you see this happening. So we have already swing high, and then we sweep that liquidity one more time, making a turtle soup before going higher. And it's gonna be like a rejection candle with a wick there. And you can recognize turtle soups in the smaller body and the bigger wick. So it's a rejection candle. So you will see that happening right here. So inside the key level, you will see that you will see a rejection candle. Same here when we have a turtle soup at the highs. You'll see at the highs, we sweep that old high before start breaking lower, making a turtle soup. So SMT in a key level, internal extra liquidity, and we have time. Because what happens is, what if price already moves higher? You think you missed the move. And then outside of a kill zone, just sure what kill zones are, make sure you check out this video. Outside of kill zone, price makes already some move, but it starts to consolidate. Then inside a kill zone, let's say London kill zone, New York kill zone, there is where you can anticipate price to create turtle soup. Because what if this is Asia session? If you want to play your classic Judah swing, your accumulation, manipulation, distribution, then in Asia consolidation and you have a key level below the structure, then you can anticipate a turtle soup there as a potential low of the session. And of course, this whole example is vice versa for bearish turtle soups. So the two-step framework for turtle soups is identify a higher type of drawn liquidity, internal to external or external to internal. And step 2 is trade turtle soup in the direction of the drawn liquidity. How can you spot a high probability turtle soup? It's SMT in a key level and using time. And now it's time to see some examples in action to train your eyes. Let's go. Here we're looking at ES at the 4-hour chart. And on the higher time frame, what do we see? What I see is that we are in a bullish trend, bullish order flow. So I want to look for bullish trades. So if there was a turtle soup, I'm looking for a bearish turtle soup, taking out some form of lows. We don't need per se a turtle soup, but we want to trade inside the kill zone, inside time, because we want to trade high probability trades. So now here, this is the London session, and for ES and Nasdaq, these are US indices, so they move in the New York AM session the most. So we're gonna wait for that. So let's fast forward to the next candle, the 6 AM candle, and here we see a massive move downwards. So at this point in time, if you would watch this live, you are anticipating potential lower price coming in, and that's totally fine. Because beforehand, you of course cannot see the candle being print, so you need to wait for this. So here you have, okay, we are very bullish, we are trading lower. If we start creating fair value gaps lower, so that means, let's say the next candle, it's going to be a bearish one, then you potentially have a structure shift on your hands that we're just going to trade in a fair value gap and then trade lower. That's the case, but you need to look at how the candles are printing. So when we see this happening, then let's go to the lower time frame, so let's say the 50 minutes, to see what we can do here. So if we remember the turtle soup depiction, this is what you want to see. So what I'm seeing right now is we have a consolidation. Look at this, not very trending conditions. And what is this low? This is a daily low. So now let's see what happens inside this price action. We leave behind failure swings. We have a current PM session high. That's a low probability high, so it's nice to target. But there is nothing here. Like now we are at the open and there is no bullish signal at all. It's just bearish. We wait just for the next candle to print. So at the open, when this happens, you just wait. You have basically now two trade ideas. One is price just continuing lower. And that's where it's very important to see how we trade inside key levels. It's 4-hour and bullish order book. So at this point, we see price creating some green candles, but we still have premium rates here. We have the order book here with a value gap. So let's see what happens there. We just need to see the candles being printed. So now this is interesting because we're now creating bullish fair value gaps. So we're now seeing here is a bullish fair value gap, and this is a bullish breaker right there, inversion fair value gap. So this area could mean longs. So I'm not going to take blindly longs because we still can just react from this fair value gap, but we could have a turtle soup on our hands. We're inside the kill zone and we are in a key level, potentially creating a reversal. And this reversal on the 50-minute looks like a turtle soup on the 4-hour. So let's see what the next candle does. So here, this signature price, we trade into the fair value gap and the bodies are closing above it. That's a signature price that I want to go long. So in this candle at 12:30, I would already be long right there. Well, where do I want to target? Low-hanging fruit is of course the PM highs here. If you go to the left side, there's lots to rebalance. I want my stop loss to target the last discount array. That's going to be this tiny value gap down here. So right there for a static 1 to 2. Let's see what the next candle does. So we come back into this again. And what do you see here? Do we see another turtle soup? Yes, we do. So inside this lower time frame key level right there, there's some accumulation. And we take out this swing low before the actual move. So here we have a lower time frame turtle soup inside a higher time frame turtle soup. So here we have a little drawdown, turtle soup, and then price comes back here to the order block, and price starts to move towards the TP point. So here we went from 4-hour internal to external, and look at the 4-hour right now. This is a 4-hour turtle soup. Right here we sweep this low and then we start breaking up upwards. And not only this, you have here a very nice entry model in your hands as well, because now you have a 4-hour bullish fair value gap and a bullish order block where you can trade off from as well. So the next day when price comes back in that area, you can already look for longs. The price comes back to the fair value gap, and what do you see here? You see Asia lows right there. Here you see also out of the kill zone lows. So remember, time is a very important topic inside turtle soups. So you see here relative equal lows right there. And look at this in the PM session. What do we sweep? A turtle soup right there. So not only do we have a turtle soup right there, also we have a turtle soup right there. And we start to trade higher. You know, for a high probability turtle soup that you need key level, you need to have time, and you need to have SMT. So now let's look at an example on SMT. On the left side, you have NASDAQ. At the right side, you have ES. So two correlated pairs, so they need to move the same. So here at the lows here, you see that the Thursday 6 p.m. candle takes out the previous low, but here we don't do that. So here at the bottom, there's an SMT. It's outside the kill zone, so there's nothing to do here. But what we want to look for is SMTs in key levels. So when we display upwards, we leave here a 1-hour bullish fair value gap. And we zoom in here. What do you see? We have here a London low, 2 a.m. low, inside a key level. And here, during the start of the New York session, we tap into the value gap, we don't take out any lows, and then we trade higher. But at the same time, yes, the correlated pair in that same 1-hour bullish fair value gap does take out the London low, creating a SMT before the move higher. And not only is this an SMT, ES just made a turtle soup. So when one of the two makes a turtle soup and the other one, you have an SMT on your hands, so you know that there's probably some short-term shift on your hands. And you see that here, like it looks like we're gonna trade lower, but then boom, we trade higher. That's because we have a turtle soup and SMT inside a key level, inside a kill zone. After the push, right there, we have another fair value gap created here, and we here have the lunch low right there, and we sweep that with this low right here, and that same low does not get taken out on ES. So there's already an indication that this is going to be a high resistance low, that we're not going to take this out. And maybe look at the time right here at the bottom. It's Sunday Asia low. So this is of course not a setup what we're going to take, but later in the day we are going to use this information that is probably a protected low, because there's already a liquidity sweep, a turtle soup inside a key level. So once we approach the New York session here on this Monday, we anticipate this low to be protected, and we just want to trade from internal to external. So here we have a 1-hour bullish fair value gap, and we want to trade towards an old high, take this high or this high. So with this in mind, you can look for bullish price action. So let's drop to the lower time frame to see if we can find an entry. So here look at NASDAQ at the 5 minutes, and here was the SMT low right there. Now we have a clear drawn liquidity, that's this high right here, the PM high, and we also have another high right there. A very bullish bias. So let's see if we can find bullish structure. What do we see here? We have a turtle soup. We take out some liquidity before the real move. And it's nice because we want to have high resistance liquidity. We take out some liquidity before the real move. And price comes back to the order block right there. And then we trade high, creating a fair value gap. I see two fair value gaps right there and right there. So for an entry, we know, okay, this is a protected low. So we don't want to come back there. We want to take out highs. I want to take the first fair value gap, put my stop loss below the other one for a 1 to 2. Well, let's say we're gonna trade to this high for a 1 to 3. We only do 1 to 2 to make a lot of money. So let's just stick to 1 to 2. See what price gives us. We get tapped in. We come back here to that fair value gap right there. So there's some drawdown here, very scary. And as a chop, we get the TP. And as you can see, we almost got stopped out. That's why it's very important to have a good stop loss. And the first high got targeted very quickly, just in one candle. And this took a little longer. It was a very uncomfortable hold. But and the reason I want to show you this example is that most trades are not as clean as you see online. Most trades, you are around your entry for a long time. You are in drawdown for a pretty long time. But using these frameworks that you know, okay, this is a high resistance low, so we don't come back lower. We have a order block sitting right there. And this order block should not be violated. And we don't, because we are closing right there. And yes, you can say this is a little luck and maybe you get stopped out in this trade and next trade you get a win. It doesn't really matter. You don't need to win all your trades. But just using these turtle soup frameworks, this is what I use to make a lot of money. So you might use these exact frameworks as well. And here you have it, the advanced ICT turtle soup model. This framework is what I use to make a lot of money, and now I've shared my secrets with you. If you got some value out of this video, if you like this video, make sure you like, subscribe, and leave a comment down below what you think of this video. This is all I have to share with you for now, and I hope to see you in the next one.